Mm-mm. Okay. I think I'm in now. Crazy, crazy, crazy. Hello, hello, hello. Happy Tax Tip Tuesday. This is day 4 of 30 live challenge. Come on in, come on in, come on in. It was in before I was in. It's crazy. Come on in, come on in, come on in. Welcome to Tax Tip Tuesday. I'm going to keep it short and sweet. I'm late. I'm late. Better late than never, right? I know I'm BCP time. I own it. I own it. I own it. I own it. So happy Tax Tip Tuesday. I am Tracy L. Tate. I am the CEO of TLJ Professional Services, where we are about all things financial. I bring to you almost 40 years experience in education in accounting, bookkeeping, accounting, taxes. And I have a master's in accounting as well as business and public administration. So this Tax Tip Tuesday is your last tip effort. We got how many days left? 18 days, 19 days left before the new year. If you all have a business or in your personal, okay, if you don't know where your tax position is right now, now's the time to be looking. Because now if you have at least one more payday left, okay, if you work for somebody, and if you have your own business, then time is running out as well. But it's an opportunity for, hey, it's an opportunity for you to cover your tax liability so it can reduce your fees and fines and penalties and all that good stuff, okay? So from a personal standpoint, you could look and see if you've had enough taxes taken out of your paycheck, depending on your tax percentage. It's a big leap between, what is it? It go from like 12% to 22. Like it literally, it's nothing in between that 12 and 22% tax bracket. Okay. And people get caught up in having multiple jobs. So I'm focusing on the W-2 for a moment. I normally focus on business, but I want to focus on W-2 for a moment. If you've held more than one job or have more than one employer, okay, more than likely your second employer or the least paying employer did not take out enough taxes. So where people get caught up when you have multiple revenues or income streams is they will never take out enough taxes for both businesses or for both sets of income. They can only take out the taxes for the income that they know you earned. Okay. That's where the new W-4 comes in as well. So the 2020 version of the W-4, which tells your employer how much taxes to take, that's where you could kind of maneuver and say, hey, I got extra income. I need you to account for, take out more taxes out of this money that I make. Because what happens is this. If you get paid weekly, it's a second job, or even monthly, they take out the taxes based on that pay period, right? Whatever that pay period is. So if it's weekly, let's say you get paid weekly, $500 a month. They're only going to cover taxes based on $500. That's like the 10% bracket. You understand what I'm saying? Now do the math on 12 months and then add that to your first job. What tax bracket is that? I guarantee you it's not the 10. I don't guarantee it because I don't know how much money you make. But more than likely, it's no longer in the 10% bracket. It could be in the 12. It could have jumped you to 22. Who knows, right? But an employer will only take out taxes based on the income you earn with them, right? So in the grand scheme of things, when it's time for taxes, you're taxed on all income. So the IRS didn't say, oh, it was this tax rate for this job and it's this tax rate for this job. No, they look at all of your income and say, this is your taxable income. What bracket is it? This is how much tax you have to pay. So that's where people get caught up in the multiple job ones, as well as like if you get paid weekly or monthly. Because again, look at the week. They're not going to take out much taxes on $500, but look at it as a month. That's $2,000. They would have took out some money on $2,000, right? Or even bi-monthly, right? They would have took out some money on $1,000. Okay, they're not taking out no money on $500, so they're not taking out enough taxes on a weekly basis. They will never take out enough taxes on a weekly basis. Okay, they can't. They have to follow the tax grid when they take out taxes from your money. That's the point of you saying, I want to do 4. That's on the old form, right? Where you say how many exemptions, 1 for yourself, 1 for a second job, 1 for how many kids, right? That's the old form. That's not how the tax brackets work anymore, right? So that's how people get caught up as well. If you're still owing, you have one job and you still owing taxes, it's because your W-4, you haven't changed your W-4. And the old exemption form, the 2019 version and earlier of a W-4, where you say how many exemptions, 1 for you, 1 for your kid and all that don't apply anymore because there are no exemptions in federal tax returns anymore, okay? So keep that in mind. People get caught up in the multiple income issue of not having enough taxes taken out or their refund being so small because of that fact right there. When you're looking at getting paid weekly, when you're looking at it's a smaller dollar amount, they're only taxing based on that little amount. However, your tax bracket is based on your larger income, okay? Or the combination of the two. So be mindful of that. And you can adjust your W-4 to account for, right, that additional income and don't get caught up. So that's that. From a business perspective, your bookkeeping matters. If you have not been managing your bookkeeping all year long, you need to do that now, okay? We offer the CFO review service where we go back to January 1 and look at all your transactions, make sure that they're classified correctly, number one, because you make decisions based on your bookkeeping. That's what accounting is, okay? You look at those numbers and you say, oh, I'm overspending on this. Maybe not, because something was misclassified. And it only take one transaction. You know, sometimes like when you, in accounting, you know, you're supposed to be able to account for every single penny, period. Because even $1 off can be 500,000 this way and 499.99 this way. That net that $1. Okay. But that's a $500,000 mistake in revenue. That's a $499,000 mistake in expenses. You understand what I'm saying? So your bookkeeping, your accounting matters in business. Now is your last ditch effort to say, what is my net profit? And be firm, is it a net profit? Because I've seen people actually expense items that it would be better or more beneficial to put as a fixed asset and depreciate, because then you get that deduction for the next 3, 5, 7, 10 years, right, of write-offs versus expensing it in 1 year and don't have no assets to show for it, right? Because your balance sheet matter. Your asset section of your balance sheet. I'm doing a challenge right now It's the Business Finances Mastery Challenge. And we were just going over that today, right? That your bookkeeping matters because not only do you make decisions on it, but that's how you're going to pay your taxes. So if your books is wrong, guess what? You're going to be paying taxes on some wrong information. Or you might get a refund and you wouldn't do a refund. Or you didn't get the refund you were entitled to because your numbers are off. So if you have a business, I don't care if you're a sole prop, an LLC, a partnership, a C Corp, a S Corp, I don't care what your business structure is. If you have not been maintaining your bookkeeping throughout the year, or at least had somebody professional doing it, because if you are an artist, more than likely you ain't doing no bookkeeping. They ain't went to school, they ain't did no classes, no courses. So you don't know what you're doing, right? If you're marketing, you might not know accounting, right? If you don't know how to keep your books, then you should not be the one doing it. You understand what I'm saying? You should not be the one doing your books because you make business decisions based on these numbers. And if you're not tracking none of them, you ain't even making no business decisions. You living as if it's paycheck to paycheck. You're operating off of your bank account. You cannot run a business through your bank account, okay? It does not account for what's owed to you. So accrual basis, right? It does not account for bills that's coming up that ain't came through the bank yet, right? Because there's such things as in transit, okay? So you need an accounting system, number one. But if you don't know what you're doing, at least invest in your business enough to have it looked at before you pay taxes on that money, right? You don't know if you're going to have to pay taxes on that money. So I'm going to put the challenge link in here because it is a 3-day challenge. You missed today, but you can catch up tomorrow. Business Finances Mastery, www.businessfinancesmastery.com. Okay, businessfinancesmastery.com. That's in the chat. So Business Finances Mastery. I'm going over all this stuff because you have to know your numbers if you're trying to have a business. Now, if it's a hobby, it's a hustle, that's different. Okay, you're just trying to look to earn extra money. But if you're trying to build a business, trying to have a company, trying to expand and leave a legacy, right? If you're trying to scale your business, then you need to have an accounting system. You need to have bookkeeping done. If not monthly, then quarterly. If you haven't done it all year long, then you may want to take advantage of our CFO review services. Okay. I put the link to the challenge in the chat. So take advantage of that. Again, we do day 2 and 3. So today we covered mindset and bookkeeping. Tomorrow we'll cover accounting and KPIs or metrics. And then Thursday we'll cover business structures, tax implications, stuff like that. So as a business owner, you need to be in the room. It's a free challenge. Sign up. It's not too late. After tomorrow, you might as well wait for the next one. Okay. But this is information that you need to know now to make that pivotal choice and change in your business before the end of the year so that it can impact, you want it to impact your taxes before the end of the year. Okay. That could be donating, right? It could be investing. It could be purchasing equipment. It could be something other than giving it to Uncle Sam. Okay, you're in business to make money, and to make the money in your business make money for you, right? So you want your money to revolve in your business. So knowing your business numbers, knowing your financials, right, is imperative to make those type of business decisions. Okay, so again, I am Tracy L. Tate. I am the CEO of TLJ Professional Services. We are about all things financial. And I was talking about tax implications today. Today is Tax Tip Tuesday. Hey, but it's also day 4 of 30 lives challenge that I'm doing with my TSP Mastermind fam. I missed 2 days, so this is day 4 for me. But I am going to be doing 30 lives about taxes. Okay, so I'm going all the way through the end of the year, and then I'm going to start the tax year with more information, because there are some things that you can still include in the prior year, even after January 1 hit. And so after January, I'll get into those things that you're still able to write off. But for the most part, now is the time to look at your numbers, see what your tax implications are going to be, and see how you can mitigate that by putting more money back into the business instead of having to pay it in taxes, because you won't get that money back that you pay in taxes. Okay, so this has been my Tax Tip Tuesday, and you have a fabulous rest of the week. Be blessed.